Good evening, and welcome to the nightly market brief for Friday, June 5th, 2026. Every night, we break down the verifiable macroeconomic facts that fueled the moves during today's session. As we mentioned yesterday, a blockbuster government jobs report would completely eliminate any hope for an interest rate cut by the Federal Reserve. The fact is, today's headline data was the strongest employment report since May 2024, which vastly increases the actual chances for an upcoming rate hike. Fact: $8.7 trillion in the nominal value of open CME Fed funds futures contracts completely repriced the forward path of the Fed funds rate. The short-term derivative strip shows massive adjustments, with the August 2026 contract pricing in 3.62%, while the August 2027 contract is telling us Fed funds will be at 4.07%. A staggering 0.145% of this entire 0.4475% increase was priced in today. This unexpected rate shock triggered a brutal liquidation cascade across the major equity indices. The Nasdaq 100 E-mini suffered its 79th worst one-day percentage loss of this century, plummeting 1,461 points, from an opening print of 30,414 to settle at 29,026. The broader S&P 500 E-mini collapsed right alongside it, dropping 200 points from a high of 7,591 to close at 7,400, while the Dow Jones Futures Mini surrendered 735 points. Algorithmic execution systems aggressively liquidated stock positions across the board to fund immediate defensive cash reserves, completely freezing out broad market growth multiples. The selling panic slammed the crypto and metal spaces with immense velocity. Bitcoin futures were completely crushed, plunging 3,280 points from an intraday high of 64,050 down to a raw session low of 59,275, before settling at 60,515. Simultaneously, precious metals completely capitulated to a surging US dollar index. Gold futures crashed a staggering $139 from an opening baseline of 4,503, down to a deep intraday floor of 4,336, before closing the week at 4,365. To break down the hidden structural crisis behind today's synchronized collapse, here is our senior analyst, Alex Thorne.
Thanks, Michelle. In a normal, healthy economy, a blockbuster employment report is celebrated because it means businesses are growing, consumers are earning, and corporate revenues are expanding. But today, the market treated a roaring jobs report like an absolute death sentence. This toxic good news is bad news phenomenon is the ultimate proof of how fragile and debt-addicted the global financial system has become. The market is absolutely terrified of higher rates because the mountain of systemic leverage cannot survive without cheap printed money. Today's severe multi-asset liquidation exposes a deeply alarming reality regarding the structural fragility of the global financial system. When you look at the historical data, the federal funds rate averaged 6.81% from 1968 through 2008, serving as the standard baseline for economic growth prior to the era of quantitative easing and accelerated fiscal expansion. Today, a robust employment report simply nudged forward rate expectations to 4.07% by August of next year. The fact that a forward rate still sitting 2.74% below the historical 40-year average can inflict this much immediate structural damage across stock indices, metals, and crypto proves just how addicted to cheap credit the modern marketplace has become. But as active macro speculators, we look past the media panic. Spending endless time and energy analyzing why the market moved in the past tense or obsessing over what might move the market tomorrow does absolutely nothing for your capital. To be quite frank, capturing the actual velocity of these beautiful trends, being positioned on the right side of the market, long or short, is the only metric that matters to your bottom line. Our primary purpose at the desk is accommodating sophisticated speculators who want to stop chasing old news and learn how to extract performance from these massive structural swings in real time. To help you qualify exactly how our desk isolates these trends with absolute data integrity, click on our comprehensive 40 market report summary linked right in this post. Next, access our interactive EMA analysis page. This workspace gives you step-by-step instructions for objectively defining short, intermediate, and long-term trends, complete with live charts, technical opinions, and active futures and options quotes to price out your speculative positions using defined risk strategies like collars. But required, viewing charts and indicators is only the diagnostic phase. True wealth accumulation requires precise execution. If you are a speculator who is ready to remove subjective guesswork from your trading desk, schedule a one-on-one online review and learn how to put the Knight team directly to work for you. Thank you for watching. Good trading, and we will see you right back here after Monday's regular session settlement.